Ed, I know you just spoke with the CFO, David Zinsser, but it's notable that even in the press release, the first sentence of the press release is our Q2 financial performance was disappointing.
Yeah, the call with Dave started with the results weren't great, and it was a difficult phone call from there. I think the point or the admission is that they were very slow to adjust their business to the reality of the environment that they're in and their own place in the markets in which they operate. Tim was talking about the long list of what cost reduction actually means. So the headcount reduction confirms the Bloomberg report. You look at the stock down more than 11%. As part of that's relief of confirmation, right? You wonder what might have been, in which direction it goes if it was a surprise. But what Dave said basically is in the markets where they still have some strength, they are not recovering at the pace that they thought. And therefore, you look at the guidance for the bottom line to come, they've had to pull costs out. The biggest admission came on AI, right? Where we've talked all week, the three of us, about where they sit in that market.
They're late to the party.
Yeah, well, what is the admission? That they don't sit anywhere in that market?
They're in the wrong product.
Well, I thought they were fixing that or trying to address that.
Yeah, I mean, I think that on the call, David and Pat Gelsinger are likely to get a lot of questions about that. The quote that he gave me is that we are overexposed in CPU as opposed to versus GPU, and GPU is where all of the investment is happening right now.
Did that sound like a revelation? Because if you had asked me that question, a layman, I could have told you that a year ago.
Yeah, it wasn't a surprise to us. I don't think it's the only thing you and I have been talking about for months.
Yeah, but I was under the impression, and you know this better than us, but I thought this is what Pat was specifically addressing with these build-outs, and I'm curious as to how you grow, how you fill this gap, and at the same time retrenching in terms of headcount and cost.
I think it's an emphasis of strategy thing. In every data center, there are many components. You still need CPUs in all kinds of data centers. But whether you're building a new data center or you're refreshing the technology in an existing one, all of the CapEx we've been talking about so far this week and last with Alphabet is not going to CPU. It's going to the high-performance GPU. Their product Gaudi, the estimate going into this was maybe $500 million of sales in the second half of the year. You note that AMD actually slightly boosted their forecast for their equivalent product. I guess the question, which we won't get to ask, but the street will, the analysts will, is, will you sell anything? Like, you've just given us guidance and a reduced sales outlook. What do you mean you're overexposed in CPU versus GPU? That said, to his credit, Dave did say they still expect growth in those more cyclical areas of the business, PC, other sort of legacy CPU for data center to recover in the period.
But there are big headwinds in that legacy business, right? You've got stiff competition, you've got uneven demand, and you've got the whims of what's the broader environment overall. We know Intel has been seen by traders as kind of a U.S. pure play chip maker. It's gotten money from the government under the CHIPS Act. So like that's kind of a feather in its cap, I suppose. I mean, what are they doing with the money that they're getting from the government? Where are they deploying it?
In the time that I've known Pat Gelsinger, he talks about something called smart capital, that you accept that all the money you need to build the industry back in America, you can't do it on your own. So it's a combination of your balance sheet, strategic investor, and we've done stories about Intel with some sort of specialist financing from Wall Street, and then there's the government component. What was really interesting is that they mentioned both OPEX and CAPEX as needing to be cut back significantly. That's really hard to understand, but then you note they reallocate it to that growth of the foundry business. That's what Dave was talking about. Still, I find this really hard to explain. Just one really quick thing. They launched their new AI PC product, but they did it from a fab in Ireland. You mentioned US, but they actually did it from a fab in Ireland. Their original plan was not to do that at all. And he was talking about how that was a really big impact on margin erosion, having to make that strategic decision. It's kind of a management story, guys. And I'm sorry to say that, but I've never seen this happen.
And that raises a lot of questions. I mean, we're 3.5 years into Gelsinger's tenure right now. He's been on the hot seat from day one, and a lot of questions from investors as to when he's going to actually, I guess, satisfy them.